Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today. We got gold melting up higher, over $5,500. Pretty outrageous, to be honest. Crypto is staying still. So we'll discuss that again. We'll talk S&P hitting $7,000 and the White House tweeting about it. And we'll be talking Fed saying no change on interest rates. Moonbirds Burb token in other news ran up to almost 500 mil FTV yesterday, or much over 400. Before it's now pulled back to around $300 million. So successful launch for the Moonbirds team. We'll reflect on that a little bit as we think about how people are building out IP in the industry and the corresponding tokens. We've also got the latest on price action, general market thoughts, and an exciting conversation that we'll be having in partnership with Tria today. Neobank posting really, really strong numbers at the moment. Successfully raised 12 million at pre-seed and then $1 million further from Legion not long ago. So we'll be finding out what their next step is in the neobanking industry. I've got Legendary in the co-host seat with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. We do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Ledge, it's Thursday. It's the 29th of January. How are you doing?
GM Jim, doing quite well. I spent this morning with my tax advisor.
Okay.
Probably gonna listen to the show as well. Go through some of the mess that I created by being an on-chain degenerate, and the things that I was looking at today with him included a lot of degeneracy back in the day on Blast. It was fun to see the Cambria duels, the YOLO stuff, the YOLO LPing, and all the other things. And it was also fun to see how often you just do weird things and you don't remember what you did. And one of the weirdest transactions was me funding a wallet on Base and then going through a contract router that distributed the money in a lot of small batches to mint some stuff. And it was a usual transaction, but the way the platform structured it made it look so weird. And I was thinking, what was that? What did I mint to that extent? And then I realized it was, if you remember that, when we started this experiment with creating NFTs out of some of our shows, and we did that the first time, and
Yes.
I minted 100 of them. And the way they routed the transaction was extremely weird and not easy to understand what's going on because it wasn't linked to the NFTs that I received afterwards. So that took me a while to figure out. And it was a trip down memory lane to remember when we were still experimenting with making episodes collectible for a while.
Interesting. That is pretty ridiculous. But yeah, that's fun. That's fun. Overall, were there any disastrous moments? Sometimes the tax conversations can be a little bit of a heart attack.
I would say angel investments that I did years ago that I've never heard of again, that did
Like, oh,
not.
where did that money go? Yeah, that's not coming back.
But to offset that, I got a mail from a company that I invested in the longevity space. And I saw that they closed another round at 5 times the valuation that I got in. So that offset the little degeneracy losses and the bad mood, because that was a more significant investment. So, it balanced out. All is good. I'm happy.
Not bad. Not bad at all. That sounds pretty good. Pretty decent outcome there. Interesting. Yeah, I think we'll do a little bit more portfolio chat today because we said we've been meaning to do that for some time. Every now and again, when we see some new opportunities coming, we think it's good to check in. And I think it's even more important at the moment because when gold is doing what it's doing, I just get the sense that a lot of people are struggling with what to do. And there's no concrete answer, right? There's no concrete answer, but it does feel like there's a little bit of mania around and we should figure it out. We should talk about that. Like we spoke about it a bit. Yesterday I was putting my position forward, which is that I think people are getting it a bit wrong. I think there is a structural change to the world, which means that this run is not going to V reverse and gold's going to decline significantly and go really, really far down. I mean, it might be volatile. But I feel like the structural change is there. And maybe we should talk about that a bit more in a bit, because that is going to be the first headline. So unless there's anything else, Led, shall we get into it for today?
Let's get into it.
Let's get into it then. All right. So getting into the price action, as always, to start you off, to get you up to speed with everything that you need to know, we've got Bitcoin down a couple of percent to 87K. We've got ETH down 3% to 2.9K. We've got BNB at $891, XRP at 187. Sol is down 4% to 122. Solana is down 4%. I've already said that already. What else? We've got Hyperliquid down just a couple of percent, back to $33. Obviously, still up 50% in the week. It's put a huge move in as it kind of got repriced and all of this very significant equity perp volume, and the potential for that as more and more assets come on chain seems like the place where that they're going to be traded. We've got on the meme coin side of things, we've got Doge down 4% to 12 cents. Pepe's down 5%. Pump's also down 7%, but also up 14% on the week. After that got repriced slightly, less so than Hyperliquid. Bonk is down 5%. Pengu's down 8%. SPX is down 10%. Pippin is down 30%. Varkcoin's down 7%. And Tibber is up 21%. That's one of the only significant green ones today. Rect is also down 8%. So red day across the board, actually, today. Getting into the headlines themselves, we've got gold melting up another 5% to $5,500. It felt like just yesterday. It literally was almost just yesterday. It was back in the last week. I bought another big tranche at 4.7. But this is it just keeps rocking. Every time you wake up, it's a higher price. We'll touch on that more in a bit. Crypto is standstill in comparison. S&P hit the 7,000 mark. As the Fed says, there'll be no change in interest rates. Ledger will talk us through both of those in some capacity. We've got to kind of meld those two headlines together. And then we'll be talking slightly separately on Moonbirds Burb token running up to more than 400 mil valuation on launch before the pullback to 300. There was actually a big win for people if you bought it at launch. I think it launched under 200 and it just ran up really, really fast if you wanted to trade it. But I think now some of the claims are going live. Some people are able to sell some tokens. So there has been some sell pressure to bring that down. Still a successful launch. Getting into some notable sales, this very big notable sale. Sam Spratt, Skull of Lucy, sold for $400,000. So the NFT market is there in the very top bracket. In some other news, OpenAI announced plans to build a social network with WorldCoin verification. That's interesting to pull out. Also, Tesla revealed a $2 billion investment into Elon's AI company, XAI. I thought that's also willing to pull out. Seeing a lot of these circular deals, right? Nvidia and Microsoft and Amazon investing in X company or Y company, and then all this money's going around in a circle. Now Elon's doing it with his own companies as well. Fidelity announces US stablecoin. Mega ETH public mainnet is announced for February the 9th. Coinbase announced a hype listing. Sony Innovation Fund invested further $30 million into their blockchain developer Startail. That's the blockchain that they're building out, which is called Sonium. I think that's pronounced like that. Hyperland announces an additional 150 million points allocated to users in secret ahead of its TGE. They announced their point system, and then after, when everyone pulled their capital, or some people pulled their capital, they had a secret allocation for the people who stayed loyal. And then finally, Pudgy Penguins announced Manchester City collectibles are now live. That is the news to get you up to speed with everything you need to know in the past 24 hours. Legendary, what is catching your attention before we get to the main stuff today?
So the first thing is the Elon Tesla investing $2 billion into XAI. I think that's something we've been seeing a lot. There's looped investments happening between NVIDIA, Oracle, OpenAI. Give them money to buy your GPUs back and all of that stuff. And I think that's going to become more and more. And it's also super relevant because once we're going to get into the first news, we'll see the S&P 500 hit a record high. And that is to a large extent driven by again, renewed optimism around AI companies. And AI companies love to do that cross-investing and increase and inflate these values more and more, which makes sense to a certain extent because it's such an incredibly resource intense business to get in and to get the hardware and to be able to do all these things. But it's also, it feels like building a bit of a leverage tower that we're all watching, and we are hoping that it's like a Jenga tower, and we are hoping that it's staying stable.
You know what I was thinking? I was thinking it kind of, it's continually going to reinforce, and maybe this is always the case to some degree, right? It's always the case to some degree that the people who are most well off continue to be most well off. But
Mhm.
now it's getting to the point where, usually if you have to raise money as a company, you have to raise money from other people. Now it's getting to the point where it's like, screw, I don't need anyone else's money. If XI needs to raise money, Tesla's going to invest in it. If Neuralink needs to raise money, XI and Tesla's going to invest in it. If SpaceX needs money, then my company's. So all of the equity, all of the money that goes into the new best companies comes from the companies that already have all the money. Uh, I don't know if anyone's really reflected on that point. I was just thinking about that as we were talking through the news. And I guess on some level that concentrates wealth even further into those people's hands, which in some ways is, well, I don't know what is the optimum redistribution method. There always has to be some degree of that, maybe. But in the current climate, I think that's probably a harder one to, well, I just think people won't perceive it very well. I don't think there's anything wrong with it as such. You're allowed to take money from whoever you want, but people won't perceive it well. And then maybe the second point is, in a way, accepting all this money or taking money from each other is just preserving your business uh, position. Because if you take the money from Microsoft, it means they're going to be your client, right? If you take the money from Amazon, it means they're going to be your client as well, probably, more likely than not. So I think there's something going on there as well, where all of these new biggest companies are just circulating the money between each other, and I'm not sure about it, to be honest. Do you have do you think this is, as you said, the Jenga situation? Do you think, what do you think about that? Do you think it's, is it sustainable? What's going on at the moment? They keep making loads of money. And then I don't know if you saw yesterday, Amazon cut a ton of people. They cut a ton of jobs yesterday. So it's like, is it fine? Because if it gets not sustainable, you can just cut more people, you reduce headcount, your revenue is still great. What do you think?
That's a very good question. It depends a lot at under which lens you're looking at it from. So if you look at it from Amazon's viewpoint, Amazon has an incredible amount of employees, right? So they can make this bet. They can make the bet. If we spend a couple bill more, we spend a couple bill more, and eventually we'll get to the point where we can save on so many people that this reduction in headcount is more than making up for the R&D investment costs, whatever they had. Then this is a worthwhile endeavor, especially as then they also have the infrastructure. They have AWS, they can sell cloud AI, whatever infrastructure too. So that's a double win for them. If you are a company like OpenAI and you're burning through 200 bill, then the question is, will you have the Facebook problem, right? Facebook was burning money, and they were like of the opinion that at a certain level they will have that many users that it's going to become inevitable for them to be able to make money and become profitable. And now you have sort of the same bet going on with OpenAI, but at the same time, what Facebook did not have back then was a series of competitors that were like equally well suited and attacking that same space. I mean, of course, you had the social media networks, but Facebook in its growth phase was clearly dominating. Whereas now you can see the shifts in AI usage happen pretty quickly, right? OpenAI gave up a ton of market share to Gemini over the last weeks, or say over the course of 2026, because I don't know if it was the last 2 or 4 weeks. So this is a completely different situation. You will have, in my opinion, a significantly higher risk of one of these large AI companies to not make it, and having burnt a ton of money. So the question is, do you view them as like separate Jenga towers, to continue on that metaphor? And like, if one of them is collapsing, the other Jenga towers are still holding? Or do you think that all of that is like one massive Jenga tower? And I feel like with the size, for example, that NVIDIA has, and all the cross implications it has with OpenAI, if OpenAI is breaking away for whatever reason, they would make it through it, but it would not be a beautiful look at the on the stock market to see OpenAI collapsing, not working out, becoming running out of money, whatever could happen. But if it were to happen to one of the bigger infrastructure providers, that they have massively over cross invested, over speculated, and over accumulated hardware, that would be a bit more critical for the rest of the infrastructure. So to answer your question, I don't think it's a straightforward yes or no how sustainable this Jenga tower construction is, but it really depends on what piece of the tower, what sub tower, or whatever metaphor you want to stick with, is the one you think is most prone to failure.
This is what I think. I think the AI stuff is not necessarily a bubble. It's clearly incredibly valuable. We've felt it ourselves in working with ChatGPT, Claude in particular. Those are the two that I've predominantly worked with. Claude being a clear step up in the latest iteration. But the thing that I think that is happening, I think this social media thing from OpenAI is a bit weird. I don't think there's anything that suggests that that would be the thing that they are best positioned to do. They were best positioned to do the thing where they provide the AI chat and then people use it. But I think people have rapidly starting to use other things, whether that's Gemini or whether that's, oh, I use Gemini a lot as well. So Gemini and Claude. And so that was the thing they're best positioned to do. It feels like a moment of desperation to me where they're saying, okay, well, we need to just, I feel like this happens all the time. We need to justify valuation, and then suddenly a different type of product, some new pivot comes in to the fray. And now the reason why you're so valuable is because you're building some other incredible blue sky thinking thing. And so and to be honest, I think there's been something odd going on there for a while. I don't know if you guys have followed the case between OpenAI and Elon, where he's obviously alleging that he owns a bunch of the company because of the way they turned it from a non-profit into a for-profit company. But that happened. So many of the co-founders left, the founding team left, then they went to start the new company, and then loads of those people left. There's just a ton of stuff going on there. Maybe it is messy when there's so much money involved in new tech, and maybe it can be like that. Obviously, if you cast your mind back to Facebook, like Zuckerberg fell out with his co-founders as well, right? At one point. And they had to move on, and he kind of continued with the whole thing. So I'm not saying it's not messy sometimes when you suddenly become the de facto leaders of it, or one of the leaders of an industry. But I think there's something going on with OpenAI. I think it's a good product, but I think the other products are also outstanding. And I think, as you said, NVIDIA would be fine, but I think OpenAI, I think people are getting worried about OpenAI's valuation. And I think it's just been pumped too much. Like, it was the first one, it came out of the gate, people got overexcited, and now people are in for so much. They're trying to figure out how to sustain that one. And that doesn't mean, and I think maybe other things do take a hit because maybe other things were valued in relation to that. I still think the other things are super valuable, and they could have a very, very valuable thing. But I think, yeah, things could take a hit a little bit with OpenAI here. But that's my thoughts. What do you think on that?
Maybe a follow-up question for you. And I know we wanted to get into portfolio chat, but my curiosity would be, does that have any implications for your portfolio so far, for the stock side of things? For the robotics is also tied to that, right? I remember that you also said for every robotics dollar that you invest, you also want to buy Tesla. Now you see the Tesla XAI cross investments. Like, do you have any specific changes to your stock portfolio, investing portfolio strategy as a result of that, or is it just closely monitoring at the moment and keep on going as per usual?
So I just thought all of Mag 7 was a little bit topped out for a while, and I wanted to focus a bit more on energy and things like that. So I did the Intel trade from about 39-ish. I did it on leverage, and I bought some more at 42, 43. It went up to 55. I'm back in that on Intel. So there's like that component. And then there's, I have some oil stocks because I think just anything energy, and I'm into uranium and a little bit of that playing right around. But in terms of the rest of stocks, no, but then I've never been a big stocks person. I need to get more into that side of things. So I'm trying to focus on energy. I'm trying to focus on Intel. That's like a company I like at the moment at the current or maybe a little bit lower than here, to be honest, would have been a nice price. Now it's kind of pushing towards its recent highs. So no big moves, I would say. The good companies that are out are still out. I think it's more going to affect the private companies. Like I think, yeah, maybe Nvidia takes a little bit of a hit, but like Nvidia is still going to be Nvidia, you know?
Yeah.
I don't know. That's my view. Should we get into the main stuff, or do you have any final reflections here?
Maybe a final thought, and I'll segue.
Let me just. I'll do
I know.
do the sponsorship thing as well. But
yeah. Final thought is we had this show with Brad where we also did a clip from, and Brad had this sentence that stuck with me where he was saying, "He who controls the energy controls the LLM." So that is my takeaway out of all of that, to have like more focus on uranium and other energy companies, which I'm probably underexposed to.
Yeah, that's my thinking. It's also a lot of people's thinking at the moment on crypto Twitter, who've like pivoted to commodities and metals and energy and all this stuff. But like, I think it's the right thinking. I think it's the right thinking, trying to think a little bit further. It's a long-term trend, I think, which means everyone is front running it now. That's why the price action is so crazy, I think. So yeah, you got to be careful with it, I suspect. But that is our thinking anyway. So look, let's get into the main headlines. We've got some important conversations to have today with the wild moves that are taking place. But before we get there, just want to give a shout out to our partner for today. This show is sponsored by Tria today, the self-custodial neobank, building the future of payments for both humans and AI. Tria unifies spend, trade, and earn across all chains, giving you one powerful platform to manage your assets securely without ever giving up control. Backed by $12 million in pre-seed and strategic funding, Tria is creating the infrastructure layer for the next generation of on-chain finance. Ledger will give you a few more details, some of their latest updates in a little bit after we do the headlines. Then we're also delighted to be joined by founder Path a little bit later on today's show. So looking forward to that conversation. But before we get there, Ledge, let's get into this first headline then. Price action is on these metals are just going through the roof. First, we need to know what we need to know, and then we definitely need your thoughts on it.
Yes, a couple of things, couple of stats to share. First, you said it. Gold had an incredible day. It's up to $5,540 per troy ounce as we speak. That puts it at 27% on the month. It puts it at 97% on the year. Second best asset, only basically being topped by silver. Silver is up 54% on the month. It's up 272% on the year, currently trading at almost $120, $119.4 to be precise. Just to continue this asset roundup, we also said it. S&P 500 is now trading just a touch on the 7K points. Yesterday it did hit 7,000 for the first time in history. Did it achieve that? I also said it before, that was assisted or lifted by AI optimism. We still have companies like Nvidia, some of the semiconductors like Micron Technology being up 6% on the day, Nvidia being up 1.5%, Texas Instruments being up 10% on the day. So the semiconductor sector is the one that does really, really well and is helping to pump the stock market as well. To continue and finish the roundup, and take a look at the crypto side of things, especially at the ETFs, not looking too great there. If we scroll back, we have 1, 2, 3, 4, 5, 6, 7 days in a row of outflows, and the only day with inflows was just 7 million in inflows, whereas the other days had outflows almost all the way from 150, 100, 700 mil, weaker, quote unquote, weaker outflow days were only at 14 or 30 mil. So we do have a net outflow trend that we're seeing at the moment for the BTC ETFs. And what is happening at the background of this, let me get this article up here, is that the Federal Reserve decided to not change interest rates. They said Jerome Powell said the economy's outlook has clearly improved since the last meeting. So there's no reason to cut rates. As much pressure as Trump is applying on that topic, they decided to keep rates where they are. And also looking forward into March to get this poly market up for the Fed decision in March. There is already significant volume on that. It's 10 million in volume, 10.7 million in volume. And the dominant outcome right now is 92% are thinking on poly market there's not going to be a rate cut. In March, only 7% think, yep, we're going to see a 25 pips rate cut. So state of the market, to sum it up, Fed did not cut rates. Stocks hit all-time highs, nonetheless, fueled by AI optimism. Gold and silver are continuing an incredible rally, and crypto is mostly flat, but is showing some weakness in the structural outflows in the ETFs. Now that is it for the roundup. Personally, for like my own portfolio and portfolio thoughts, I'm still holding on to my gold. I just don't see a reason here, as crazy as this pump might be, to sell at the moment. I think we've seen a significantly higher amount of volatility with gold, which is maybe unprecedented to that extent. We had this one day where 90 minutes, we saw a reversal in the gold price, silver spot price, that evaporated $1.7 trillion of market cap, where I said it's basically the same market cap as BTC. And then a couple hours later, it was fine. So I don't want to be scared out by daily volatility, but I do think basically under the current circumstances, ceteris paribus, that gold, not financial advice, should continue on its trend upward as long as nothing else is changing. And Trump is still continuing on his position that dollar is fine, and it's fine if the dollar is getting weaker. It's helpful, and all the other asset prices can move up. So that should be helpful for more and more people to want to add gold as a hedge. Silver is the one thing where I don't know, to be honest, because the one thing, as we said, which is driving silver is that is closely associated to gold, but the other thing is also the industrial demand for silver. And they simply do not have conclusive data on the supply versus demand side. Like, are mines starting to catch up? How long will it take for them to catch up? What is happening there? I don't understand this industry. I'm not a miner of any means. So this is why I'm a bit more careful with silver, and I'm happy to take some profits and lock some gains in there. For gold, I'm happy to hold. And for the crypto side of things, from the short-term portfolio, basically I said that one of my biggest new things was this hyperliquid BTC liquidity pool, which with Hype's pump completely sold out of Hype, DCA'd into BTC beautifully, which worked out well. But I'm not intended to hold that BTC right now, to be honest. I'm like, I'd rather convert that in a euro-based stablecoin and farm yields on that. That is a short-term bag. I still have a long-term BTC bag. But for this, call it trading, working capital part of the portfolio, don't want to hold BTC at the moment in that short-term bag.
Yeah, I think I agree with, I don't know anything about silver either, to be fair. All I know is my mum texted me yesterday asking if we need to buy silver. So you guys can figure out what you need to do with that information. One caveat is that she actually wanted to buy Bitcoin before everyone in the whole family. And my dad didn't let her. She was like, why? This is a silly idea. Why would you want to buy Bitcoin? And then she didn't buy Bitcoin, and she was right. So she's always been right. So who knows? Is it a top signal? is this the strategic buying point? I don't know on silver, but I'm just giving you that extra data point. So silver, I'm not so sure. I think I'm far more comfy in gold, like you are as well. We've been speaking about last few days. There's a whole host of reasons why. Um, there's a whole host of reasons why gold is uh, good now, especially when you take into account what is happening in the world. Trump's stance with Europe. We have China's desire, or people in China's desire to buy gold, because I don't think their alternative investment options are as good. I think you have everyone divesting a little bit from America anyway. You have rates potentially coming down. You've got the America being hostile and the whole world polarizing a lot more, as people realize that they can't really rely on the states as much as they did before, especially if they're going to be as hostile. So everyone recognizes that they need to be more independent. And I think maybe that is the way to think through your investing strategies for the next however long, 6 to 12 months at a minimum. Everyone in the world is deciding that they need to be independent. So if that is the starting point, what does that mean for your portfolio? I think that definitely means that you need gold. And that's why, for me, and who knows, it could have a horrific correction, but we know that the central banks are accumulating gold. In my opinion, or my instinct is that they're not going to sell it immediately. We reported on Tether yesterday accumulating more gold than all of the central banks, and their intention to continue to accumulate. So they're on a humongous buying spree. And that is noted as well. So for those reasons, I'm pretty comfy there. Your point, and then when you think forward, I think we're coming back to that energy point. Like, if everyone needs to be more independent and less reliant on others, you're just going to have to really start investing more in yourselves. And that means being self-reliant. That means resources. It means energy. It means, but also like everyone internally. So in a way, this whole thesis is kind of a thesis of everyone in different countries, stop piling into Mag 7. Things in your own country are going to need to get built up, and they might even need to be done so with the support of the government, which means they're going to have to be propped up or pushed up, just in the same way US is doing it. It's not like this is a small country propping up the private industry in some shady way. This is America saying, we're going to take 10% of Intel, and now the price is going to pump. We're going to take, I can't remember what percent of that USAR company, the resource company, and now the price is going to pump. Like, we need stake in it, which means the people of all those other countries where they're going to follow suit, I suspect, there'll be those similar opportunities in your own companies. So if you think about it like that, there could be this long outflow from all the other people in the world who have always just been allocated to US equities because it's clearly the best move. Why not do the equivalent of following your own government into your own stocks and riding that up over the next decade, because you need to because you need to develop your own independence in some capacity. So that's how I'm thinking about it, I think. Any further thoughts there, Ledge?
Tend to agree that also maybe in the interim makes some European stocks interesting. Probably the caveat there being that majority of interesting tech companies does not live in the EU. Because when you say that the US government is taking a stake in Intel, I was thinking, okay, what would be the equivalent of the Austrian government taking a stake in what company? Because we are lacking some more interesting companies from that tech or AI side. But on a general basis, I do think that, and especially coming from a Europe perspective, that it might be worth that to look at some European stocks, or at least get some European index exposure, because ultimately the majority of my bag is stock set, and the stock set of things is the MSCI All Country World. And this is super heavy on American companies. This is super heavy on the NVIDIAs and Apple. So I might want to increase the European part a bit as well.
Yeah. Interesting. Yeah, I don't know, man. I think just being heavy on metals and commodities for the next 3 to 6 months is probably the play. which is what we've been talking about. We'll keep talking more about this. We're gonna leave it there for today. We feel like I'm kind of repeating the same stuff we talked about yesterday, but I do think it's going to be a trend, and we'll talk about more ways you can get exposure over the course of the next few days. Let's get into the next headline today because we've got an interesting one. Ledge, why don't you do this bit on Coinbase first, and then Tria on Coinbase, and then we'll do the next headline, and then we'll welcome Path to the show.
Yep, absolutely. You already did introduce Tria, self-custodial neobank, allows you to spend in over 150 countries, using more than 1,000 tokens. On-chain staking is coming as well. You have yield farming on the app. What I've also liked on this redesigned website is that you now can spend up to $1 million a day. So Tria is clearly living in a very bullish market environment. Behind the scenes, however, they do run on its own tech, which is called Best Path. It's a permissionless Pathfinder marketplace where micro markets compete to move your money faster, cheaper, and more securely across chains. And just 2 days ago, Tria or Coinbase Markets did announce that they added the Tria token to their roadmap, which means Coinbase Tria will get a Coinbase listing as we are getting closer to TGE.
A little bit. We've got one more headline to get into before we get into that conversation, and it is about Moonbirds. So this is the news that Moonbirds launched their token yesterday, the Birb token. It ran up to as high as almost 500 mil FDV. It launched around just under 200, ran up pretty quickly straight after, and now settled at around a $300 million FDV at the moment. For context, Moonbirds is the IP that was originally, if you don't remember, produced years ago by Kevin Rose, a prominent kind of tech founder from a few years ago. He kind of gave up on the project, left the project, was not interested in doing it more after the price went up to as high as 30 something ETH at one point in time, from a 2 ETH mint, and then collapsed all the way back down beneath mint price. So it went on a journey from 2 ETH to like 10 ETH straight trading after. This was back in NFT mania, all the way up and then all the way down over the years. And then Yuga Labs took it over. And then Spencer from Orange Cap, a prominent NFT investor and trader, has taken it over since from Yuga. And this is their attempt at building out the IP in a significant way. So a bit of context about Orange Cap maybe is that they've built the TCG game for Pudgy Penguins called Vibes, which is pretty interesting. So that is that. That's the context. There was a little bit of confusion or criticism around the tokenomics. They produced this concept called nesting 2.0, where instead of getting a full airdrop, NFT holders would not get a full airdrop at the time. They have to nest their Moonbirds, therefore taking them off the market and then receiving their allocation of tokens over the next 2 years. I think it's over the next 24 months, you receive equal amounts over the 2 years. And obviously, holders of NFTs who expect things for free all the time, we're not happy with that. On the other hand, you had founders like Gaga and some other prominent people who've been involved in the space for a bit longer saying, look, the model's not working in general. It's not working for anyone. Everyone launches these tokens. They just give people money. They sell it straight away. The token goes all the way down to zero, and it's just not helpful for anyone. Like the people get some money, but then the thing goes to zero. The project goes to zero. The NFTs struggle. The community is unhappy. So something needed to change, I think, is at least the other side of that argument. And that is the side of the argument that I end up on, to be honest. I am on the side of the argument, which is people, you can't keep doing the same thing and expecting a different outcome. I think they say that's literally the definition of insanity, right? Like you keep doing the same thing. Why is it not working? Why is it not working? Why is it not working? Well, you're doing the same thing and it's proven over time that it doesn't work. So I'm very, very open to this change in dynamic, change in mechanic. I think it gives teams a little bit more time to prepare and deal with the future sell pressure. Sure, it's kind of putting that pressure in the future, right? You're pushing that problem down the line a little bit. And so that is something that they're going to have to deal with, but it buys you a bit of time to keep building the business and keep doing the stuff. And one of the things people will have observed from Moonbirds in the short space of time since Spencer's taken over is that they are always shipping things. They're always shipping, they're building, they have a real revenue generating business from the Vibes TCG portion of the business, which is more than what you can say from a lot of other businesses, right? Who are, primarily reliant on, or were reliant on, NFT royalties and things of that nature. So I'm actually open to it. I know some people, probably people were thinking, okay, well, that's just going to make the price go down. People are going to be unhappy. They're going to sell and just leave. But I think something needed to change. Ledge, what do you think?
I think if you have a real business, and that is the case with Moonbirds, it's legit to need more time and to look for these mechanisms, how you can buy that time and how you can be a bit more controlling of the supply. Would definitely not agree if there is no real business model tied to it. If it's just trying to keep an artificial low float to have more time to extract value, to dump the token, to pump the price, whatever. But in this case, makes sense. There is a real world business tied to that is running and on its own clock, so to speak. And I do understand why Orange Cap Spencer do have a mechanism like that to alleviate some of the sell pressure and give themselves a bit more time.
Yeah, I think something needs to change, guys. In the NFT model, something needed to change. Royalties are gone. It's some model needed to change for sure. I know people can now use enforced contracts and things like that, but something needed to be adjusted. So I think that's the attempt that they're making. And to be honest, I get a similar sense to what I feel when I observe how Rect build. And full disclosure, I was early stage investor in both. I think people really want to see from their teams that they're out there like doing stuff. And a lot of NFT projects are doing stuff, but maybe they're behind the scenes. Maybe they're not doing enough. Maybe they come out and raise money every now and again, and they go back behind the scenes. And these are two examples of people whose founders are out there all the time, doing stuff on stage, making things happen, creating new products, pushing things. And I think that's what the market wants if you're going to take this specific route, which is like have an NFT, do a token, create your brand in that way. So I think it's a great start for Spencer. So let's see. I am biased, but that is my view, I think, which is being proven correct, hopefully, I think, by the market at the moment. But look, let's get into the conversation that we wanted to get into. As we said before, we've got an interview in partnership with Tria today, which is super excited to have. We've been talking about Tria for a long time. They've been doing insane numbers on the neobanking side. That's why I'm very excited to have this conversation today. Delighted to welcome to the show Parth from Tria. He's the co-founder of Tria, a self-custodial neobank that raised $12 million to make crypto as easy as using Revolut. Parth's been a very early blockchain user, starting as an Ethereum miner before building a gaming company as a teenager. So looking forward to dive into that history. Now he's solving crypto's biggest problem, which is actually just using it in the real world. So Tria lets you spend, trade, and earn across all chains from one balance. No gas fees, no bridges, no seed phrases, with Visa cards working all over the world today. So we'll talk about Parth's journey into crypto, why he thought Tria is important to build, some important numbers and learnings, where he sees the outlook for Tria in the neobanking industry. Parth, welcome to the show. Great to have you with us. How you doing?
Hey, no, excited to be here, man. We had one of the other spaces a couple months ago, so excited to be back. I'm excited to have a good conversation. Doing good, man. Doing good. Out here in Dubai at the moment with the team, all locked in. How are you guys doing?
Very, very well, man. I'm out here as well, so maybe we need to catch up. We'll catch up at some point if you can. If you're not too locked in, you might be so locked in that you're literally locked in. But if you're not, we'll have to do something at some point. So look, we've got this really interesting history path I was looking into before the show today. Tell us, for people who don't know you, we're going to get into Tria, we're going to get into product. I know there's a lot of excitement about TGE and the Coinbase listing and the other things you've been securing on the exchange side. But tell us a little bit about Parth. In your bio, ex-ETH miner, gaming founder, previously number 20 esports player. Like, what's that about? Tell us about your history and how you got here.
Yeah, no, that's a fun one. That's a fun one. No, actually, interesting that I got into crypto because of gaming, right? And a lot of folks that I do know in the crypto space have had a bit gaming backgrounds for some fun reason, right? No, quick background on myself. I'm Parth, one of the co-founders here at Tria. I actually started off, sort of my professional journey in gaming first. So I used to play esports early on in 12, 13, all the way up to like 2015. At one point, I was like top 20 esports player. I used to play like Destiny, COD. I had a lot of fun back then. Then built a company around that. Back in the days, Discord didn't exist. So 2014, 2013. It was hard to find players to play games with. So I ended up building a platform that would help you find like similar skilled players to play games with. It blew up, it shot up. I exited that and I got paid in crypto. And I've just been in the rabbit hole in the trenches ever since. And then shortly after I started mining ETH, so 2015, 2016, 17 was mining ETH. Worked on a lot of like POW, proof of work, miners and open source projects back then. Also around the Litecoin ecosystem. And then I honestly just been like trenching, degenning during the ICO phase in like 2017, 18, degened all the way up until now where we're building a neobank. So yeah, excited to be on here. Happy to talk more. I'm unable to hear you.
You are muted.
Yep.
Apologies. Just a quick notice for the people who are listening in. I think we're getting some technical issues on the spaces side. So if you want to go over to YouTube. I think the video stream is all good and all fine. So if that's going to be better, you're just going to have to hop over there. So Parth, I think what you're saying is super interesting. We'll get into the neobank stuff in a moment, but in terms of this early on-chain experimentation, game experience, what was your biggest learning from all of that experimentation that you were doing at a young age on-chain?
Back then, it would definitely be around that there's so much stuff that needs to be built, right? It was just a chain. It was, Bitcoin, ETH is just a chain. There were, back then you didn't have a lot of stuff. Now we do. Now we have, back then you just had to be technical to use crypto or to understand anything that's going around. Now you don't. Now like moms and dads, friends and families, moms and pops, they're able to use crypto. But back then I would definitely, I used to think, right, that the tech needed to be built way more robust. The UX definitely needed to come to where it is now. But yeah, I would say these were like the two core things that I noticed, and that's actually where Tria started. Tria started 2 years ago, where we solved interoperability first, right? There were like a billion chains, different L1s and L2s in the space, and that's how like Tria sort of started solving these problems one by one around UX, around interoperability, and obviously up until now. Up until like literally last year, using crypto in your real life was just a nightmare, right? I've been in crypto for like almost like 10 years now. And honestly, I personally started spending crypto in the real world only 2 years ago. But now we're able to. So yeah, that's sort of where we're at today.
So was Tria always a neobank, or did you have like some early concept beforehand, like trying to solve some other issues? How did Tria become what it is now?
Absolutely. No. So Tria started off 2 years ago, almost a little bit more than 2 years ago now. So essentially the problem that we started solving first was it's always been around UX and usability, onboarding the moms and pops. The shirt I'm wearing, it literally says onboarding your mama to Web3 on my back. So we started off with Best Path. That's our core tech. Long story short, it's essentially an intent marketplace wherein you have multiple parties that are called pathfinders. Users, they express their intents. Hey, I'm trying to swap my USDC over to something on Aptos, or I'm trying to go from chain A to chain B, from token Z to token X. That's essentially what we started solving first. That tech now, or even as of like last year, is natively being used by like Polygon Aglair chains, Arbitrum Orbit chains, Sentient. AI agents are using that. Injective, a lot of different protocols. So it started off with that first. What a lot of people don't know about Tria is that we were not neobank first. We built the tech, and then the neobank was built on top of it.
So why did you think then, after you built all of these UX solutions, what did you think about the neobank opportunity that made you think this is the right direction for us next? Like, why did you want to take that step?
Absolutely. I think this is one of the answers that I have, like, we've never made like sort of public or even talked about it, right? So last year, I would say like around Jan or Feb, we had a term sheet from one of the largest funds in this space, right? Both Web 2 and Web 3. And what we realized as an infrastructure company was like, hey, the tech is, the on-chain space is growing so much so fast, right? And the tech is always going to get better. Best path is always going to get better. It's always going to be efficient. The users are going to get the cheapest cost, the fastest times. And if, there's going to be one point where it all leads to, essentially, it's a race to zero, right? We're not going to be left with any fee to be made, because the tech is just going to get so much better. From a business perspective, what we then realized was like, hey, you're not going to be able to, build a real business out of it unless you own the entire user flow end to end. That's where the neobank came in, right? And then interestingly, the entire neobank right now, that like around, we actually have like 400,000 users right now, it's all built on top of BestPath. And thanks to BestPath, we're able to do so much in the neobank that if you were to pick any kind of neobank in the space right now, they wouldn't be able to do. For instance, right now, I use Tria card. I top it up with meme coins, right? I top it up with my dust coins. So all that, once again, happens through BestPath. BestPath is just so efficient in terms of interoperability, payments, and settlements. It's used with the neobank itself natively. And there's like, probably like 6 different touch points in the app itself right now that use BestPath. So that's sort of like the backstory there.
Very, very interesting. And so you mentioned that your numbers here, I think that's one of the things that stood out about Tria recently, where you've been posting these really big adoption numbers. So you mentioned 400,000 users, I think, at the moment. Where do these numbers come from? What's like the most interesting insight that you get from this data about your user base that you're willing to share?
Absolutely. Absolutely. I would say, so quick background here. So we actually made a tweet around, I believe it was Jan 2nd, that we were at like 150K users. Don't quote me here. And literally Jan's not even finished yet and we're 400,000. Obviously, a lot of it comes from our GTM. We've been heavily inspired by the simplicity and go-to-market from a business perspective of Revolut, right? Revolut did an amazing job in Web 2, acquiring users, building that flywheel. So essentially, that's where the growth is coming from. I would say one of the most interesting insights is the fact that people want to spend their crypto. A lot of our user base, probably like around 50%, is Web 2 or Web 2.5. These people, the users, they don't even know what chain they're on. They don't know what EOA wallets are. They don't know what gas fees are. All they want is to be able to, let's say, hold Bitcoin or ETH or whatever they want to hold, and to be able to spend it whenever they want to spend it. And yeah, I mean, it's working out so well. It's, it's validated. People are using it.
What do you think? Congratulations on that. It sounds like really impressive numbers. I think in our audience, we have a lot of sophisticated listeners, investors. We spoke about you guys when you did the Legion sale as well. And I think on an operational side, people want to know like how you guys managed to achieve that, how you continue to operate, or how you will attempt to operate to continue to keep scaling in this way. So what's your kind of outlook for how you managed to achieve that, and what's the best practices on like the secrets of GTM to really hit the ground running and achieve this growth?
Absolutely. And I was listening in here when you guys were talking about NFTs and the NFT projects in the past, right? I think what we luckily, fingers crossed, got right with was the GTM, right? Was the GTM, the product, the team, right? Product is usable, it's real. In Web3, you don't get to see that often. We're all about revenue. We're all about building a real product, right? So that was right off the bat. That's the absolute minimum you need to be able to achieve any kind of scale, any kind of like realistic long-term value, in Web3 or Web 2. So we started off with a good product. What followed after was a good GTM. So I told you, right? Like, we're heavily inspired by what Revolut did. And we actually didn't, share a lot about this initially, but we have now around 11,000 affiliates, both Web 2 and Web 3, that are going out there all the way from like, door to door, to Telegram groups, to Twitter, to, Facebook groups, everywhere. Like, people need this product, and we just cracked a very good way to be able to distribute that without burning, so much money as, a pre-seed, or let's say, it's pre-seed company. We didn't even raise our seed round yet, right? So essentially, we've been able to get the GTM right, and to be able to continue that, right? Like, I'm not too sure if you've been following on Twitter, but we've just consistently been building, right? Since the Legion sale, I believe, when we did our Legion sale, we had around like 30, don't quote me on this, 30, 40K users. Right now we're like 10x that. We had around 15 mil volume, if I'm not wrong. Now we have 150. And I believe all of that comes down to the usability of the product, and the fact that we've been just able to extend it so well. Since then, back in the Legion times, literally November last year, we primarily only had trading and spend. Now we have trade, spend, plus earn. So people are, depositing, earning yields up to like 13, 15%. We have an insider build of our perp decks, and that's going to come out very soon as well. We're coming out with Tria travel, Tria hotels. So you're going to get a lot of perks around travel and hotels. And then there's just a lot of building happening, honestly. And people trust that. I use that, right? My mom and pop use that. So effectively, it's just, it all comes down to building a real product that, is solving a problem.
Very interesting. You spoke about the affiliate stuff. I was speaking to one of my friends who's a very, very notorious, outstanding like GTM guy. And I think, I'm not a go-to-market person necessarily, but I realized he said like referrals are everything. Like if you can design the right mechanism and the right incentives to get people to want to share it themselves, so it takes the load off your back, it's just so important. So I can see how that would be super interesting. I want to double click on some of these products that you mentioned in a second, but maybe one question about the regions. You've got all of this volume taking place, all of this activity. Are there any regions that you are most focused on? Are there any regions that you want to get more exposure to in the future? Like, how you think, like, to what extent do you think geographically about the world and your future user base?
Absolutely. So we started off the beta around 5 months ago now, right? We started off actually with Japan and Korea being our earliest communities. The reason why we wanted to do that is to be able to target the hardest communities first. Because in Japan, if you're able to get the UX right, if you're able to get the flow right, you win, right? They're very picky users. There's feedback like every single minute of the day that we used to get back then. So we started off with that. Now there's a lot of APAC, a lot of Middle East, a lot of Europe that uses us. Similarly, like US, I believe that's what our core, what our focus is going to be in terms of expansion. And that doesn't mean like we're going to slow down on like APAC or other regions. But I think US is where US, North America, South America, I believe these are LATAM. These are some of the regions that we're going to double down on over the coming months, big time.
That's really interesting. I wouldn't have necessarily guessed that. So it's interesting for, I think, the audience to learn like the thinking behind it. You mentioned some products there. So obviously you've got the card, which people have been spending, which is a great unlock for crypto because all this crypto was locked up in people's wallets and couldn't do anything with it. But you've mentioned earn now as well. I think this is the natural trajectory for all these companies that are custodying funds, right? Like, what are you going to do with the funds? You want to earn something in the meantime. How does your earn product work? And to what extent do you differentiate from other products that are looking to, become like a new bank, offer perks and all these types of things? What's the differentiation between you guys and some of the other offerings out there in your mind?
Absolutely. To correct you here right off the bat, everything is non-custodial here. So Tria is not custodying anything. Yeah.
Good.
Right off the bat, to answer your question, in terms of earn, how we do it, we're working with Agora. We're working with a bunch of different, custodies, essentially vault solutions that are able to generate 13 to 15% yields. Recently, we launched an AUSD vault on Monad that's been able to do, I believe, 13 or 15. Don't quote me on there. But right now, we're just essentially we have a dedicated team that's bringing these vaults over to you in the app. We're not managing them. We're not custodying your funds. Your funds are all, with the, in the ethos of Web3, fully decentralized on smart contracts. And these contracts obviously have been like audited like a dozen times. They hold billions of dollars in value, so on and so forth. And then in terms of where this goes next, interestingly, I actually haven't talked about this as well, like a lot in public, but what we're looking into next now is right now people are able to, stake blue chips and stables. What we're going to get into next is actually RWAs, as well as Web2 assets, or just essentially stocks, lending, borrowing with fiat. So that's actually something we're looking forward to.
Interesting. I mean, we're all over that on this show, as we've come to recognize, right, with HIP3's integration on Hyperliquid, for example, just insane volume and increasing volume on HIP3, the various providers moving through, whether it's metals, commodities, stocks. Clearly, I think, in our opinion, like the next stage of, well, whether it's speculation or long-term investment, but that's the next wave, I think, to ride for us. So that's very interesting from that perspective. Okay, what about, so on the raising side, you mentioned you haven't even done your seed round yet. You did raise initially quite some time ago. Then you also did this Legion raise at, I think you raised $1 million at $100 million FDV via Legion. 200, sorry.
Yeah.
And how do you think about the purpose of raising then at the moment? Because I think some people think of the community round as more of a community thing. You haven't even done your seed round yet as such. How are you thinking about managing the money that you have when you strategically take on more? What's the thinking?
Absolutely. From a business perspective, like, and for the info to be out there, like we've done our pre-seed and strategic. That was our 12 million initial round. And then essentially the whole goal with the Legion round is community, right? We wanted to build like with the GTM that we had around the whole Legion sale, wherein all Tria premium card holders, the metal card with 6% cash back, they all got a guaranteed allocation. We essentially didn't want that money, right? All we wanted was to be able to, essentially have buy-ins of the users that are going to be with us long term. So that's essentially what the Legion sale was all about. In terms of future raises, not too sure. Like I can speak more on there in the on this space, but you'll know soon. You'll know soon. There's a couple interesting things that we're doing around cashbacks, around our ability to pay even higher, more cashbacks. Right now, I believe we've if I'm not wrong, we've accumulated around 3 mil or 2 mil. Don't quote me on here once again, in all user cashbacks. So we're working on deals with a lot of different ecosystems, wherein these cashbacks are paid not through our own pocket, but also these ecosystem, these aligned ecosystems that we're working with. You're on mute.
Thinking forward, what do you see? I think there's going to be a lot of competition in this industry, in the neobank industry specifically. Where do you see the neobank industry moving in 2026? What are your predictions for your part of the industry?
Absolutely. If you hop on to Payment Scan right now and go back to, I believe, Jan last year, the neobank space did 15 mil in volumes. Right now it's at 150. And I don't think it's stopping anytime soon. In terms of where I see the space going next, like I literally had this space yesterday with Sentient and the Polygon team around payments, and we were talking about this big time. Wherein right now, like whatever the market is doing, right, it's always going to be up and down. There's going to be Web 2, Web 3 cycles, but at the same time, like there hasn't been a better time to build / be in the payments space in crypto, right? Obviously with Genius, with institutions coming on board, Fidelity's new stablecoin, everybody's getting onto payments. They realize how efficient this stack is. And I think what the next biggest unlock is, and Tria is working very hard on that, is this whole thing I talk about, programmable money, that is not just me, but we've had this term for so long, is the ability, is gonna become a widespread thing when people actually do onboard over onto non-custodial finance, and then essentially are able to do things that DeFi offers them, or crypto offers them right off the bat, without locking their funds, without having to go through like 10 different parties in the middle, without having to wait for paperwork to be done, so on and so forth. When you have access of programmable money, you know, on your fingertips within literally like a few seconds. I think that's going to be the biggest unlock, and we're like working so hard to enable that. And for instance, right, earning yields, using the same yields as collateral, and maybe fronting your credit, right, things like that. So there's a lot of things that are on our roadmap that are all working toward this programmable money becoming a mainstream primitive effectively.
Interesting. Okay. Yeah, I think that makes a lot of sense. What do you think about, again, looking forward now, maybe in the shortish term, the TGE, you've got a lot of excitement. I think you're all locked in preparation. We had the Coinbase announcement not long ago that you're going to be included and listed at some point soon. How are you thinking about like the token generation event? How's the preparation been? What can we expect coming out of it? Like, what's the Tria position at the moment there?
Absolutely. We're stronger than we've ever been, right? Obviously cannot talk a lot about it yet. But it is coming. It's going to be super strong. We're really excited, honestly, from a business perspective and just personally. I think the token utilities that we do have planned, right day one. We're not talking about roadmaps. We're talking day one. Even the ones that we do have planned, I think people are going to love it. The community is going to love it because it's real utility, right? It's going to empower users to use more and save more, right? And that's all I can talk about. You'll know soon. You'll know very soon.
Okay, soon. The classic soon answer. We did get some specific questions in our Telegram chat. You got to ask when. And the answer is soon. The answer is soon, guys. Okay, as we come to a conclusion here, a couple more questions. Just maybe even on a personal level, like what are the catalysts that you think are on the horizon for Tria, and what are you most looking forward to for building your own company in the next 6 to 12 months?
Absolutely. I think the catalysts are already here, right? From a product / business perspective, we're very happy with where we're at. We're not gonna don't plan to stop anytime soon. We're gonna keep hustling, keep building, keep shipping. From an industry perspective, right? From a personal perspective, as I said, I don't think there's been a better time to build in payments. So really bullish on the entire space in general. And I think it's literally up only from here in terms of payments. Banks are hopping on board, institutions are hopping on board, governments are, and the people are. So overall, just I think the sentiment around payments and the bullishness both in Web 2 and Web 3, it's unmatched. So super excited about what's to come.
Very exciting, Parth. Thank you so much for joining us. If you want to follow along with Parth's journey, his Twitter handle is @ParthBL. And obviously, if you want to follow along with Tria's journey, it's @UseTria. Is there anything else you'd like to share, Parth, before we close out for today?
No, absolutely. The only thing I would say is just turn your notifications on. It's going to be interesting times.
Very exciting, man. Thanks so much for joining us. Right. Appreciate your time. Appreciate the insight. Super interesting insight into the neobanking industry and what we can expect over the next 6 to 12 months. So thank you for joining us.
Right, thanks for having me.
Just a reminder, guys, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on XX Video, YouTube, and you can catch us on Apple and Spotify as well. Apologies for some of the audio issues. We were going great on video. We'll be back same time, same place tomorrow in both locations. We will see you then. Have a wonderful day. See you tomorrow. Bye-bye.